Hello and welcome to the 30th lecture of the course Forex in 3 steps. The previous lecture we took the first advanced strategy, which is the Fibonacci strategy, and this lecture we will discuss the volume profile strategy. This is also a fairly simple strategy and it is very easy to use, plus it is very basic, and it will help you very much, especially with markets that are moving sideways and not specifically trending. The volume profile is basically used to measure the volume of a specific time period within the chart. So let's hop straight into it and explain everything you need to know about volume profile strategy and how to implement it with other strategies in order to profit from it. This is what a value area looks like. A value area consists of 3 lines: the value area high, the point of control or the POC, and the value area low. All these 3 act in a very similar way, but they're all measured in different ways. The value area low and the value area highs are a standard deviation. It is a measurement. It's not important to know the measurement, but all you need to know that it is a standard deviation determined by the volume. And the point of control is the line where most trading activity took place between this point and this point. That is basically what the value area high, the POC, and the value area low indicate. It is measured all by volume. But it is very important. This is not the important part. The important part is understanding how they work. So all 3 work in the same way. It is very similar to support and resistance, because the value area low acts as a support when you are above it. So let's just imagine that price is ranging here. When we go back and hit the value area low and we are coming from above, it means that it acts as a support and it can push price up. Same thing with the POC. If we come from here and then we reclaim the POC, price is able to reclaim the POC, it acts as support as well. And same thing with the value area high. If price is able to go up and then reclaim the value area high, it acts as a support. It acts as a floor that price can bounce from. And the same thing goes for the other way around. If we are coming from below, price is ranging and it comes from below and hits the value area high acts like a ceiling or resistance. And if we go below the POC, it means that price is going to reject from the POC likely, because it acts as resistance. And the same thing with the value area low. If price is falling below the value area low and retests it, it is probably an indication that price may go lower, because this line acts as a resistance. So all you need to know is, depending on where price is, the value area low and the POC and the value area high act as support and resistance depending on where the price is at. Of course, this is very helpful when you have a range. So if I have a range, price is, for example, ranging and it's inside a range, then the value area low, the value area high, POC, and value area low can help you in entering trades and being able to determine where price is heading. Because as you know, inside a range, price is moving sideways, and the value area high, the POC, and the value area low act as support and resistance where you can enter trades from. So for example, if I have a Fibonacci retracement, for example, that is in confluence and at the same line as my value area low, if price decides to go here, then this is a good spot to trade, especially if it's also a support zone that was able to push price once before and then we come to it again. This is a nice area. So the value area low, the POC, the value area high are very nice to have as well with other indicators and other strategies to have more confluence in your trades. There's also one thing that is very important to know about the value area, and it is that as soon as you start reclaiming a value area low or losing a value area high, it's always an indication that price is likely to go to the POC. So if price is coming, for example, we are in a range, price deviates the value area high, and then we start losing the value area high again and retest it because it is now supply or it is now resistance, and then this is an indication that price is likely going to hit the POC. And same goes for the POC. If price comes here and then we lose the POC and price retests the POC and fails to reclaim it back again above, then it is likely that we are visiting the value area low again. It is like a step. So for example, the same thing goes for a bullish scenario. If we are in a range and price deviates the value area low, we lose it, and then we are able to reclaim it again. This is an indication that price will visit the POC. If we are able to reclaim the POC, then this is an indication that price will go to the value area high, and vice versa, as I just showed you. So this is how value area works. This is how it works. This is how you should consider it. You should always pull it from left, of course, to right, and I will show you how to pull it on TradingView. The unfortunate part is it requires a premium subscription with TradingView if you want to use the volume profile, and you can find it from here. So basically the fourth button the fifth button down, you just click on the arrow, and then you will find the fixed range profile, volume profile, and this is the volume profile you are looking for. As soon as you select it, you can start pulling it from anywhere you want, and it will show you how the same thing we just covered. It shows us the value area low, the point of control, which is always the highest area where volume had. So as you can see, if I zoom in here, you will find the volume, how volume worked, and the purple is the sells, the blue is the buys. So basically it is telling us how the buying volume versus the selling volume was inside this range from the area you pulled it until the area it ends. So in this scenario, I pulled it from this high until this low. So now I'm seeing all the volume, where the volume averaged throughout this area from here to here, and this is what we have. Of course, again, you have the value area low, you have the POC, you have the value area high, and if you focus, you will realize how much they are important and how much you can really trade from them. By simply just zooming in, you can see how much they act as support and resistance, and how much you can rely on them with trades. Especially if you start adding other confluences and other strategies with them, you will have success trading them very much. So for example, here you can see as soon as we started breaking upside the POC, yes, we did drop again, but then there was strength once again, and we started going up and reclaiming it. And as you can see, look here, look how we bounced straight from the POC, and then price started to go up, and then it was able to visit the value area high. Why? Because we were able to break the POC. As soon as you break the POC to the upside, it means you are going to the value area high. If you start breaking the POC to the downside with a candle body close, it means you are visiting the value area low. And as you can see here again, we were able to break past the value area high, which means it now acts as support, and we did bounce off it once we retraced, but there was weakness and we weren't able to keep above it, and then price at the end fell below it and then retraced here once again and started visiting the POC. As soon as we closed, it was in the same candle, but as soon as we started losing the POC, we actually visited the value area low, where we could have actually entered another trade. So basically you could have just waited until we lost the value area high. You could have shorted here, and then you could have bought here after this nice bounce and this nice bullish candle. And I'm sure if we drop to the 2, 3 and 1 minute, you will find other entry methods and other confirmations here where you can enter. And again, as soon as we started breaking above the POC, we basically bounced once, we bounced twice, because it acts as support, just like I said, as long as we're above it, and it acts as support. And then what happens when you start breaking above the POC, you are able to reach the value area high once again. And actually we did hit the value area high once again, and then we rotated back once again to the value area low, especially since we lost the POC again. And this is just how easy it is to trade the value area low, the POC, and the value area high. You can keep these scenarios happen a lot, where price keeps rotating back and forth from the value area high to the POC to the value area low, value area high. So value area low, POC, value area high, value area high, POC, value area low. It's all like a domino effect. It works in a mysterious way, but for sure, as you can see, it really is it acts as strong support and strong resistance, just like you see here. The amount of times we bounced and rejected from these areas is magnificent. And this is basically how the value area works. Do not enter blindly. This is like the first and most important tip for all these strategies. Do not enter blindly at just because we started bouncing from a value area or a POC or whatever. Wait for your confluence, wait for other things. So for example, here you could have pulled a Fibonacci as well, and as you can see, yeah, the 786 was very close, and this means that this area is a very nice area to buy from, and this adds to confluence. And I'm sure again that there was a bullish candle, so that's also a check mark. There was probably a break of structure here, and we will cover breaks of structure and demand zones and other things that will help you identify POIs or points of interest in trading, and will make you profitable as long as you practice and make sure you understand everything to the fullest. Thank you, and I'll see you in the next lecture.